Good morning and welcome to Options Guide TV. My name is Brian Overby, the author of the Options Playbook and your host for the next, we'll say 25 minutes here on Options Guide TV, if that's what my feeling is. Markets are, I don't know what the markets are. The markets are all over the place. We have the S&P 500 index down about 16, kind of flat on the day. The VIX index has creeped above the 20 level. So there's finally some uncertainty that's making its way into the marketplace. Next week we got the Fed meeting. That should be a big day, obviously, as the markets wind down. Right now, according to the Fed funds futures, it's not that exciting. There's like a less than 1% chance that the Fed's going to do anything, according to the CME Fed Watch and the trading of the futures market. Now, if we go all the way out to December, there is about a 70% chance, if you add everything together, of a rate increase. So the markets are trying to process all of this CPI data and inflationary data. A lot of that we've received. Markets are, the consumer is still resilient. Inflation is still heading in the wrong direction relative, and the markets are, we are still trying to find reasons to set new highs. I like that. That makes, I think that flows. The market is trying to find reasons to set new highs, and that's all the money that's coming in on the AI side of things. We had a big sell-off. Well, not a big sell-off. We had a sell-off on Friday, then we had a bounce back, and then we had another sell-off to go along with it. We're still have some earnings that are trickling in. As a matter of fact, Chewy announced this morning, and I thought Chewy would be in. I've always thought Chewy is an interesting parameter. If you're looking at potential recessionary insights, Chewy, everybody's willing to spend on their pet until they're not. And so Chewy had a blowout quarter, very strong numbers, but once again came back and said cautionary tales about going forward. The numbers weren't bad. They didn't really adjust expectations that much, but that was the vibe that was going on in the conference call. And we see Chewy down today. But still showing that as another company in the retail space announced earnings, still having strong earnings reports across the board. I'd say overall, the earnings season so far has been around 80% winner, or I should say people that have beat. And that's been the numbers across earnings, all companies. And so still very strong earnings, but everybody's getting nervous about the consumer. Okay, so we have the two big stocks today that we're going to look at. We have Oracle, which we have a position on, and I want to review that position. Then I think I'm going to toss in a trade on Adobe. But Adobe is a very interesting chart at this point in time. So software and hardware combined. Oracle, we're talking data centers. And we've looked at quite a few positions on Oracle. So we've learned... it's been a good learning experience with Oracle. Stock has been volatile, but hasn't really moved much, honestly. So let's run over to the Trader Pro software. Let's look at the portfolio and let's look at Oracle. And I see out there, Kurt, good morning. Well, welcome back. And here's our Oracle position. If you do have any questions, please feel free to ask inside the chat box. I want to make this as open outcry presentation as possible. So these are some of the trades. We actually sold a put in the fundamental Friday saying wouldn't mind buying some Oracle if the stock is below 210, and that's where it's at right now. So if I'm looking at that position, this was from the fundamental Friday selling. It was pretty much an at the money option contract. Now it's just a little bit in the money, bringing in a lot of premium heading into that earnings. We then also looked at a open wing butterfly with calls. And so we put this trade together on Monday. Stock is coming back a little bit. We're at the 230, 260, 275 level. So from 230 to 260. That is 30 points wide. And then we went 15 points wide on the short spread that actually pays for the butterfly. So this is an open wing. This means that if the market shoots through the 275 level, we would still be profitable on this trade. So I'm going to take that trade and let's send that one to the ticket. If we closed out the trade, we'd get $3.50 for it. I think we're up about 50 cents on the trade right now. We put it on for fairly close to $3 when the trade was executed. I don't know exactly where it executed inside the paper trade portfolio, but I do remember that it was, well, if we went out to the 618 expiration. Now, we also looked at a 20-point wide butterfly, but inside the paper trading account, we only looked at we only executed the 30-point wide trade. But the 20-point wide trade, Kurt, you might know, what was the price we were looking for there? It was a little bit lower. I don't recall exactly. And then we also did a short. We did a diagonal trade in Oracle where we bought a little bit out of the money call and then sold a shorter term call against that position. That near term option expired worthless and brought in $3 on the position, but the stock actually went down. So heading into earnings, instead of just riding the long call, we decided to hedge again, and we sold the 265 call on that position and brought in some more premium and lowered our cost basis on our long call option. So right now, our long call, our 255 call is we brought the cost down to about $6, and we see it trading at $2 right now, heading into that earnings report. Keep the position on. We have a 10-point wide spread. The maximum that it can trade for is 10 points. We brought the cost basis down by putting the position on, selling a shorter term call, and then rolling into a long call spread. So like I said, it's been an interesting, I don't know, position in Oracle. And I just think that Oracle in general is an interesting stock. The data centers are getting built. They've highly leveraged and made real big bets on the fact that the data centers are going to get built. There's been a mad dash for cash. The SpaceX IPO has drawn a lot of attention to the spend and the fact that that company's coming public. People are speculating on that some people might be selling some of these stocks because they want to get into the SpaceX, and just a lot of noise around the IPO, and some people are blaming that for the market downturn. But if we look at Oracle, huge move up all the way up to the 340 level because of the database scenario. Realizing they were running out of cash, they started raising cash. People got mad about that spend, came all the way back down, and had this bottoming pattern right around the 140 level. Stock came all the way back up. Now we are hanging right at the 200-day moving average. You got the 20-day looking to try to cross over, which would be called a golden cross. And down below here, we have the 50-day moving average too, down right around the 180 level. The stocks are starting to turn up, all the moving averages, showing, a little bit sign of life as far as Oracle is concerned. And it will all be about CapEx spend. It'll all be about the earnings in general will probably be strong. But it's all about the spend. And Oracle is making a big PR push across, everybody that's working in data centers is making a PR push to try to say data centers are good. You want them in your community. Here is why. They're going to pay their fair share. And we'll see. I think that's going to be more of the theme as we get into the earnings report and the conference call. Okay. Stock comes down. We're trading right here. Oracle is up today as we head into earnings. It's actually up about $3 earlier. Now it's only about 0.5%. So it's came off a few points as we head in, and our butterfly has dropped a little bit down to the 330 level. All right. So we are going to ride that into earnings, and we're going to look at all of these positions on Oracle. The put inside this paper trading account, we're going to say that is a we're doing it as a cash secured put. The paper trading account definitely has enough capital in it, and we're saying we're willing to buy the stock at $210. It's $21,000 if the stock gets put to us at that price. And we were able to bring in at the midpoint, or we were able to bring in $12 when we put this trade on. So the actual buy price is $208 based off of the premium that we received. The midpoint on that is $18 right now. So we can actually, we could close a position out if you would like. We'd be down a few dollars on the trade, but our ultimate goal is to buy it, and we're a little bit in the money at this point in time. All right. Any questions on the Oracle position as we head into earnings? This Friday, we're going to have a fundamental Friday. We'll look at the put, but we really won't talk much about the advanced strategies that we have on Friday. So after the announcement today, you're kind of on your own. We're not going to come back and actually look at this as much, but overall, kind of bullish on Oracle. You never know about anything on earnings. And as long as the data centers are getting built, I think Oracle has potential upside, looking at doing a little bit of bottom fishing. And that's what the chart is saying too. So we can zoom back out. And just this isn't that long ago that we were back at where is this? April of 2025. All of this climb all the way up to 350, all the way back down to 140. Now we're trading within that range. All right, let's look at Adobe. Well, let's start in the chart. Adobe also is a very interesting chart. They're really getting beat up because of the threat of AI. And once again, look at this huge move down, bounce back. Now we've gone below that low point. And we're getting a little bit of a bottoming pattern. So I want to focus over here because there's many times we've came down to let's call it 234 level. So I'm looking over here, 233.95. So we came down to the 234 level. 1, 2, kind of hung out there. We touched it again. 3, 4, 5, 6, 7. 8 times and bounced back in this area. So trying to form a little bottoming cup and handle pattern. But right now, man, this earnings report, which is Thursday after the close. So if I was going to do this trade that I'm going to propose today, I would try to probably set it up on Thursday as opposed to Wednesday. But if we get a breakdown below this lowest level, that is not good for the stock. So my outlook for the stock is going to be or the trade we're going to look at on the butterfly side of things is the skip strike butterfly, targeting a 1 standard deviation move to the upside. See if this holds. If this doesn't hold, say bye-bye to the stock, and we'll have to go back and see what area that the stock wants. It'll be new territory that it hasn't been in many days. So let's see if I can go out 3,000 days. See the last time we were at this level. Yeah, I can. Okay, so last time we were at this level was 2019 on Adobe. 2019. Trading at a 13 times earnings on a trailing basis. Heading into this earnings report. So obviously way overdone as far as a valuation is concerned, but a lot of people are saying that the main software, the Adobe Acrobat, and a lot of things also, they've tried to expand in the AI space and provide tools to clients and customers. And 205, I guess, would be the next lowest area if we break through this 240 level. What an interesting chart. Let's get short. We're going to do it with protection. And I already have the trade set up in the what if calculator. So this is a skip strike butterfly. So if you're going to optionsplaybook.com, type in skip in the short in the search box, and you want the skip strike butterfly with calls if you want an overview of the trade. In this situation, this is an alternative to a short call spread. So we're bearish in particular to start on this trade. This is the profit and loss graph as of today with the very high pumped up implied volatility. If we look at earnings here, we got going out to June 2nd, we're talking about 200% implied volatility. Going out to the 18th, we got 117, but just a lot of volatility in the front month. And that's a lot to do. Oh, that's Oracle. Let's ADBE. I think we're still over 100 on Adobe. Yeah, 148. Yeah, 200 surprised me, but 148 still a lot of earnings. Now, the biggest thing too is that you're going to have one day for these option contracts to live. If we get to Thursday, you got all day Friday. So just extreme pumped up implied volatility to go along with the Oracle trade too, but 148 implied vol. So that makes it feasible to get this trade done for an okay credit to the account. Let's go back to the what if calculator and let's send this to ticket and see where our net credit is at. And then we'll go back to the trading. 46 cents. That's not too bad. Okay, so if we were doing the short call spread, we'd be looking at selling the 270, buying the 275. That is the short spread that we are embedding in our trade to pay for our butterfly. If we do the skip strike butterfly, we can get this done for about 46 cents. On a 5 points of risk, we're pulling in 46 cents right now. We have our hedge in. So if I run back to the what if calculator, as expiration approaches, this is going to quickly approach the midpoint of our skip strike butterfly. Now, the main goal is to make the 46 cents. So don't do this trade thinking I'm going to try to get a home run and put it on for 46 cents and sell it and capture this $5 because it goes right out at 265. But it is a solid trade, decent risk reward with a hedge brought into it. All the way up, it's got to go to the 265 level. So if we get on the chart, where is that at? Well, I guess the recent high was 280. So it's very feasible that it could get to that level. 265 is right here, right at the top of this gap, actually. This gap down from this level to here, we're at 265 right there. 274 is the most recent high. Stock's going to obviously be volatile. 148 implied, 260 to 265, all the way up to 270. If we get it done for 50 cents, that's really not a bad alternative here. So let's set this trade up. And let's make this the official paper trade for today, even though we really are centered on what's going to happen in Oracle. But I'm going to put this trade on, and we'll call this the official paper trade, and we'll toss it into our portfolio, and we'll come back on Monday after Fundamental Friday, and we'll look at the trade. So Adobe, the stock is currently trading at $236.68. We're down $1.12 on the day. They're going to be announcing this Thursday after the close. We're going to look to do a skip strike butterfly in Adobe with this Friday, the June 12th expiration. So just a few days away. After the earnings report, there will only be one day, one trading day for the option contracts to live. We're going to look to buy the 260 strike call, sell 2 of the 265 strike calls. We'll be skipping the 270 and buying the 275. We're looking to get this done for a net credit. Well, we'll take 50 cents. Right now, it actually moved. It's a net credit of 56 cents. But this is an alternative to a short call spread. Our risk is from 270 to 275, which is the short spread that is embedded into the butterfly that helps pay for the butterfly. So I don't think of this as an alternative to a butterfly. I think of it as an alternative to a short call spread. So I want to compare it to the net credit that I would receive on the short call spread, and I want to approach it that way. So it's a short call spread with a hedge. That's a long phrase, but that really describes what we're doing here. I call it inside my book the skip strike butterfly, and it's also that under that name inside optionsplaybook.com, skip strike butterflies with calls. All right, I'm going to send this down to the trading floor. Boom goes the dynamite. Order has been sent. All right, that's the Adobe trade. And if you have any other questions, I mean, we're really just going to ride it out and see what happens here in the Oracle position. I don't mind the Adobe trade, but man, that is a strong bottoming pattern. But every single time that the stock touches this level down here and doesn't bounce back hard, it's harder for that support level on the downside to hold. This is going to be the catalyst, and we're either going, I mean, in a weird way, this is almost the long straddle. It might be the play, right? Either buy the call and buy the put, but don't ever look to do it around earnings. But looking at this chart, like after earnings, right, something's going to happen. Something's got to give. So bouncing up, the vols are I don't like long straddles around earnings, but if there was one to look at, this would probably be the case, because we're either going probably up towards the 200-day moving average, or we're going all the way down to wherever that level was that I showed. Let's go back. Let's do this. Auto range and go all the way back. So this level down here is the next 203 on the downside. So we're talking 36 points there, and that 72 here. So let's go at a week. Let's look at the. I'm just kind of muttering. I'm curious if we went out, let's say 8 days. Yeah, in 8 days, the at the money straddle is $20-some. Let's toss this in here. Too many legs. Okay, let's go and toss. Let's just mark this. Okay, so the midpoint is $25. If I look at that chart, the potential for a $25 swing, this is if we bought the at the money call, bought the at the money put, that would be the expected move going out 8 days. Now, it's very important that we're using the June 18th. It gives us 8 days until that expiration. But 25 points is not unfathomable in Adobe. And remember, you're going to always have the opposite side to offset it. But if you don't think it can move 25 points, you don't want to do this trade. But it's interesting. I know what side I would take if I was forced to take this trade. I would definitely go long the trade. But a very, very obviously speculative trade. It's very expensive just to speculate on a move around earnings, but interesting. Even just buying a call or just buying a put outright is not outrageous. What happens if we go to to the 26 strike, $14, huh? A lot of difference in skew from the 2-day to the 1 week to the 16-day. So this is actually trading, well, we're at 236, we'll say 237 right now. So we got 237.50. Yeah, we got 230. We don't have a 237 strike here. And we don't here either. Okay, so that's the 235. So let's look at the 235. 15 and 13, $28 to add another week of time. Yeah, if you just bought a call or bought a put, flip a coin. I'd 100% flip a coin. Where is it going next? This is the catalyst. It's on the chart, sitting right at this support level. It's going somewhere, and it's probably going to go there hard. And this was just a strong move to the downside too, from the 240 level all the way down to hit the support level again. Man, it's going to be hard to hold that up if they got any bad news whatsoever. All right, I don't see anything in the chat box. Good morning, Erica. Good morning, Kurt. I know Kurt's got a position on. He in Oracle. I think the 20-point wide butterfly we talked about on Monday. And all right, no questions. Thanks for stopping in. We'll see you Monday to review these trades. Stop by on Fridays, Fundamental Fridays. We're learning about options. We're placing paper trades. Open up an account at Tradier. You get access to the paper trading app. You can trade right along with me every Friday as we put on basic option trades and basic positions real time inside the Tradier.com paper trading app. So thanks for stopping in. We'll see you this Friday, hopefully, for the next edition of Fundamental Fridays. See you then.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.